Welcome to Electrified. It's your host, Dylan Loomis. Quick shout out to my newest patron, E&M. Thank you for choosing to support the channel. So today kicks off Cyber Rodeo Week at Giga Austin. To everybody traveling this week, safe travels and have a wonderful time. Tag me on Twitter with your videos and pictures so my friend that I'll be visiting and I can live vicariously through you guys. And Giga Austin does have red, white, and blue Model Ys, so wouldn't it be cool if they arranged them like an American flag? Also, Joe Tetmeyer shared some images today of the Tesla Semi on site with a new black top, looking pretty tough, and many other preparations taking place for Thursday. And you've probably all seen the delivery numbers and commentary by now, but I'll just add, Tesla is liquidating some inventory here as deliveries exceeded production, which is a good thing for operating cash flow. Lease rates are down slightly from Q4, and there was a shift of more Model S and X sales relative to 3 and Y. Also, some of these deliveries were after the price raises, and Tesla did prioritize FSD deliveries for a few weeks, which should help margins. All of these factors combined will help to offset some of the inflationary pressure Tesla saw in Q1. And as a reminder for Q2, as Berlin and Austin ramp, we will see extra downward margin pressure as Tesla begins realizing some fixed cost deleveraging for these new factories. All that means is when Tesla starts to deliver new vehicles from Berlin and Austin, they will begin to realize some of the expenses for those factories that will ultimately hit the books. So of course, all things considered for Tesla, a great quarter. One last thing I want to point out, a lot of people are talking about things like this, other automakers being significantly down. Just remember, they are coming from a much higher base and Tesla is still a growth company, so it's really not a great apples to apples comparison. And specifically this tweet, just to be clear, these top figures are US auto sales and this number is Tesla's global sale. So if you're wondering what Tesla's US number would be and where it would fall on this chart, Tesla would have around 112,000 deliveries in the States, or up about 58% year over year. And just an important tidbit when it comes to daily production rates in Q1 for Tesla, it ended up at 3,393 units per day compared to Q4, which was actually only 3,324 per day. So production rates per day actually higher in Q1. We got a new note from Piper Sandler with some excellent takeaways. In the quarter, Tesla sold about 2.7% of all new cars in the US. As a percentage of the luxury market, Tesla's share is much higher, around 16.5%. Model 3 now represents 1 in every 4 luxury sedans sold in the US. This is 4 times higher than the next best-selling luxury sedan, the BMW 3 Series. And the Model Y is also the best-selling luxury SUV in the United States with around a 12% market share. Shifting gears to Tesla's market share in China, the market share has risen to 1.8% overall and 10.9% of the luxury segment. In China's more fragmented luxury SUV market, the Model Y has quickly risen to number 1. The Model Y accounts for 14% of all luxury SUVs sold in China, 1.6 times more than the second model. This report was also filled with some really interesting charts, so I'll include a link so you can access all of this later. Just a few of the important ones: Tesla's market share as a percent of overall light vehicle sales. As you can see, in the US, China, and Europe, all of these lines are still trending up despite whatever the competition is doing. And this is the data that really matters, not Tesla's percent share of EV sales, because obviously coming from such a high place, over time that will decrease, but it's the total number of Tesla sales relative to the entire auto market. Here you see in China, the Model Y in a short amount of time has overtaken the now number 2 best-selling luxury SUV, the Mercedes GLC. And shifting to the United States, a similar story, the Model Y becoming the best-selling luxury SUV, now surpassed the Lexus RX, which sits in second place. So many of you know this is the first piece of art I purchased through Masterworks to serve as asset diversification with an asset that historically does incredibly well in times of inflation. And yes, Masterworks is the sponsor of today's video. Truth is though, I'd be invested with them even if they weren't. Masterworks gives us access to exclusive pieces of art like Banksy and Monet via fractional share ownership. I can now hold my shares until Masterworks sells the art, or I can sell my shares sooner on the secondary market. Why am I doing this? Well, 2/3 of billionaires allocate between 10 and 30% of their portfolio to the fine art market, and success leaves clues. Since just 2020, Masterworks has sold 3 paintings with each returning over 30% IRR to investors, and these offerings usually sell out in a few hours. Contemporary art has outpaced the S&P 500 by 164% from 1995 to 2021, and it's been shown to have the lowest correlation to equities of any major asset class. When you sign up, you get a free phone call with a Masterworks expert, and at least for me, it was incredibly valuable. So if you'd like to skip the waitlist, you can use my link in the description below and check out the premier art investing platform. And here we have the 13G, Elon Musk buying 9.2% of Twitter, worth around $3 billion. I just want to say, first of all, to everybody saying, oh, Elon's distracted, this is going to hurt Tesla. That is a laughable argument in my opinion. Elon is not like you and I. He is built different, and this passive investment in Twitter isn't going to require Elon to do some insane engineering on a new rocket engine. It's just going to be kind of shifting some of the principles and the focus and maybe attacking some of the low-hanging fruit that I'll touch on in a moment. Elon doesn't need 40 hours a week to steer the ship a little bit differently at Twitter. So Elon is now the largest shareholder of Twitter. Elon actually didn't own any other publicly traded company, so this is indeed unusual for him, and you can bet that he has a purpose other than to just make a return on investment. So this may be classified as a passive investment for now, but we can be sure that this isn't going to be passive for Elon. Remember, when you own over 10% of voting shares, you're then treated as a principal shareholder or an insider by the SEC, so there's some reason why this is kept at 9.2 at least for now. However, to be clear, even though he's the largest shareholder, to actually come into Twitter and just start throwing his weight around and do whatever he wants, he would actually have to be a majority shareholder, which is more than 50% ownership. That's where you can start doing things like replacing CEOs and board members, etc., not the role Elon is walking into. For now, this throws cold water on Elon developing his own social media platform, which I actually prefer because that would be an incredibly challenging endeavor to actually generate significant adoption like Twitter already has. And that low-hanging fruit I was talking about, like bots, crypto scams, Twitter having an average UI, the way threads work, these are hopefully areas of focus that Elon can help the board look at and find solutions for. And as I said, this will have a minimal impact on Tesla, but it is part of Elon's striving for ensuring that the future of humanity is good. And here we have monthly candles for Twitter stock going back to 2013. However, what I want to point out, as of about a year ago, February 2021, Twitter stock has been in a free fall, and this is really the only news that has given it a jolt. So it really has been a stagnant social media platform, and only time will tell if Elon can right the ship and what he's ultimately looking to do. A quick word of caution for any Tesla owners: when the car is in dog mode, you can still open the windows, and apparently some pups out there are learning how to do this in the front seats, so just a word of caution. Giga Shanghai was supposed to reopen for production today, however, those plans have been canceled according to an internal memo. No reason has been given, and the factory now has been shut down since March 28th, so it was shut down all last week. And at this point, no official plans for when the factory is set to reopen. So long term, not a big deal, but it will be interesting to watch how China handles its zero tolerance policy, especially if COVID sticks around like many experts believe that it will. Additionally, some of the latest reports have Giga Shanghai producing about 16,000 units per week, so given that it's now been shut down for a full week, that will have some sort of material impact on Q2 numbers. However, Giga Shanghai was operating below full capacity, so if any of these supply chain issues subside, then in theory they could ultimately make up some of that lost production. Here we have a really cool piece of news and another example of how Tesla is innovating in every area of the business. If you're not familiar, MakerDAO is a crypto lender that gives loans at predetermined interest rates, often much lower than traditional finance. Maker is the longest running project on the Ethereum blockchain. Basically, a real-world asset is now becoming collateral in the DeFi world. DeFi is not just a tool for speculators, but this shows it can be used to fund real tangible endeavors. So what is Tesla actually doing with MakerDAO? Well, Tesla is building collision repair centers starting in the United States. Instead of taking out traditional debt on a balance sheet like the old way, now Tesla is using credit tenant leases, or CTLs we'll call them, to raise cash to actually build these new facilities. A credit tenant lease is just when someone finances construction and then Tesla agrees to pay X amount of rent, and that rent will increase by X amount each year. So now for Tesla, instead of taking on debt, which shows up as capital expenditures, it's now actually an operating expense, meaning Tesla isn't taking on new debt. Tesla is paying that X amount or that yield that serves almost like a bond, and Maker will then supply a loan against that fixed income stream. And Maker said this is just the first deal with Tesla. Although it's small, around $7.8 million, there are already more that are supposed to close in the quarters to come. Once again, this loan that is coming from the DeFi or the decentralized finance world uses the Ethereum blockchain, and these loans usually have interest rates around 2 to 2.25%, which is much more competitive than traditional asset-backed lending. A DAO is just a decentralized autonomous organization. A lot of times when these start up, they have to be centralized to start, meaning that there is still a legal entity. Just a fun fact, MakerDAO is one of the only that has gotten rid of that legal entity, so now it's fully controlled or fully decentralized, meaning the owners of the Maker tokens fully control this organization. And in the land of crypto, that's a really big deal. But for Tesla, a lower cost of borrowing, an easier access to capital, and better aesthetics when it comes to accounting. In a note from UBS, we get a pretty interesting takeaway as they do an EV survey. They say, Tesla's global EV leadership will not be threatened even by the most aggressive competitors, we believe. The only negative takeaway from this year's survey is Tesla's shrinking lead in China, where local BEV brands display strong positive momentum. However, remember what I said earlier, it's not Tesla's percent of the EV market like UBS is referring to here that we really need to watch, it's Tesla's percent of the overall auto market that really matters. Some bullish news on Tesla's supercharging network. Elon said they aim for 30% gross margin or around 10% profitability, all costs included. I personally thought the supercharger network was more of a break-even endeavor. However, now we learn that Tesla is making roughly 10% on its supercharger network, and presumably this will be higher once it's opened up to non-Tesla EVs and they ultimately pay a higher rate. My patrons will know I am loving this bit of news. Hertz buying 65,000 EVs from Polestar, mostly to be made up of the Polestar 2. If you're not familiar, Polestar is my favorite EV brand behind Tesla. Purchases will occur over 5 years, and availability is slated to begin in the spring in Europe and later this year in North America and Australia. Last up for today, GM also spotted benchmarking the Lucid Air, presumably as it prepares for the upcoming Cadillac Celestiq EV and another future EV sedan. That'll do it for today. Please take a second to like the video if you did. Hope you guys have a wonderful day, and a huge thank you to all of my Patreon supporters.